Meanwhile, George W. Bush has tried to shore up investor confidence in the government's ability to prevent the financial crisis from further deterioration.
Our financial markets continue to deal with serious challenges. As our recent actions demonstrate, my administration is focused on meeting these challenges. The American people can be sure we will continue to act to strengthen and stabilize our financial markets and improve investor confidence.
But the U.S. President did not announce any new policy measures. Instead, he plans to meet with U.S. Treasury Secretary Henry Paulson to discuss further measures to deal with the crisis. Yang Yan, CCTV.
Wall Street had its best day in 6 years on Thursday, but not before going through a roller coaster session that ended with a furious late rally. Stocks rebounded sharply after news that the U.S. government is considering a more comprehensive solution to the ongoing financial crisis. The Dow Jones Industrial Average jumped 3.86% to over 11,000 points, while the Standard and the Poor's 500 index climbed 4.33% to just over 1,200. The rally came after news broke that the federal government might create an entity to absorb banks' bad debt. Treasury Secretary Henry Paulson is reportedly considering the formation of a vehicle similar to the Resolution Trust Corporation that was set up during the savings and loan crisis in the late 1980s and early 1990s. Wall Street hopes huge federal intervention will help financial institutions get rid of bad mortgage debt, stopping the drain on capital that has already taken down Wall Street powerhouses such as Bear Stearns and Lehman Brothers. The U.S. Federal Reserve, along with central banks in Europe, Canada and Asia, have pumped as much as $180 billion into money markets. The inflow of cash on Thursday aims to combat stock waves from the worst financial upheaval since the Great Depression of the 1930s. U.S. President George W. Bush also made a speech on Thursday to promote market confidence. Yang Yan has the story.
The actions are aimed at boosting winning confidence that governments can step in and stop the crisis from spinning out of control, and also at getting banks around the world to open their ever-tightening purse strings. $180 billion has been allocated through reciprocal currency arrangements with central banks in Europe, Japan, Britain, Switzerland and Canada to increase liquidity in the financial market. This brings the total amount of capital the Fed has injected into the world financial market to $247 billion. The Fed has called on major central banks to continue their cooperation and take appropriate steps to address the ongoing pressures.